The Eurozone is not just a common currency area. It's also a dynamic marketplace where both professional and retail traders participate in shaping the financial landscape. In this video, we'll take a journey through the history of trading in the Eurozone, exploring how it has evolved from the early days of the euro to the present, where technology and regulation play crucial roles in both professional and retail trading. The birth of the Eurozone and the introduction of the euro marked a transformative moment in European financial history. Between 1999 and 2002, the euro replaced a number of national currencies, uniting the economies of 11 countries into a single monetary area. This shift was part of a broader economic integration process that aimed to facilitate cross-border trade, reduce currency risk, and enhance the region's global competitiveness. For financial markets, the transition to a single currency created both opportunities and challenges. Initially, the euro faced uncertainty as traders, investors, and businesses adapted to its value and stability. While the euro's introduction aimed to strengthen Europe's economic cohesion, its early years were volatile, with some skepticism about its viability and an uneven adoption across different member states. The currency was introduced in electronic form in 1999, and euro banknotes and coins were not circulated until 2002, creating a transitional period marked by dual currency usage and logistical complexities. As the euro became more embedded, professional traders and financial institutions had to adjust to the new dynamics of a unified currency zone. Major financial hubs like Frankfurt and Paris emerged as critical centers for trading and investment. Frankfurt, with its close ties to the European Central Bank, ECB, quickly cemented its role as the region's primary financial center, while Paris also played a key role in fostering euro-related trading activity. Large investment banks, hedge funds, and institutional investors, well-versed in managing currency risks, began to recalibrate their portfolios to take advantage of the new currency environment. The creation of the Eurozone created a more liquid and integrated financial market, allowing institutions to engage in cross-border trading with fewer barriers. However, this transition was not without difficulties. For traders accustomed to dealing in national currencies, adjusting to a common exchange rate for multiple economies presented both technical and psychological hurdles. For retail traders, however, the early years of the Eurozone were challenging due to limited access and high barriers to entry. Retail trading, especially in currencies, was not as accessible or as developed as it is today. The technological infrastructure necessary for individuals to trade euro-based instruments was still in its infancy, and the costs associated with trading, such as spreads, commissions, and high minimum capital requirements, were prohibitive for many. Furthermore, limited information and the complexity of global currency markets meant that retail traders struggled to navigate the new environment. The major players in the market were the large financial institutions and investment banks, leaving retail traders with less visibility and fewer opportunities. It would take another decade of technological advances, such as the rise of online trading platforms, to democratize access to these markets and provide individual traders with more tools and information to compete with professional institutions. The evolution of professional trading in the Eurozone has been shaped by a combination of technological advancements, regulatory changes, and the pressures of globalization, all of which have significantly altered the landscape for institutional traders. The rise of electronic trading in the early 2000s marked a pivotal shift for professional traders. What had once been a more traditional, human-centered activity, focused on phone calls, face-to-face meetings, and manual order entries, transformed into a highly automated, algorithm-driven process. The advent of electronic trading platforms allowed for faster, more efficient transactions, and the implementation of complex algorithms revolutionized how trades were executed. High-frequency trading, HFT, emerged as a dominant force in Eurozone markets, where algorithmic systems could execute thousands of trades per second. This created an intensely competitive environment, as firms with the best technology and lowest latency gained a substantial advantage. High-frequency traders took advantage of small price discrepancies across markets, capitalizing on speed and data analysis rather than traditional fundamental or technical analysis. The rapid evolution of these trading strategies highlighted the growing importance of technology and infrastructure in professional trading, where success was increasingly determined by computational power and access to real-time information. Alongside technological changes, regulatory frameworks in the Eurozone evolved to address the new challenges presented by these market developments. A major milestone was the introduction of the Markets in Financial Instruments Directive, MiFID, in 2007, which aimed to increase transparency, promote competition, and protect investors across European financial markets. MiFID introduced new requirements for trading venues, such as multilateral trading facilities, MTFs, and provided greater clarity on the handling of financial instruments. As trading volumes soared and markets grew more complex, MiFID was updated with MiFID 2 in 2018, which sought to strengthen market oversight, improve transparency in non-equity markets, and curb risks associated with high-frequency trading. These regulations also mandated stricter reporting requirements and better monitoring of market abuses, ensuring that the Eurozone's financial system remained robust in the face of technological disruptions and increasing globalization. Globalization and the growing interconnectedness of global financial markets have further shaped the professional trading environment in the Eurozone. As markets became more integrated, Eurozone traders faced increasing competition from global players. The rise of trading hubs in New York, London, and Asia meant that trading strategies and capital could flow more freely across borders, amplifying competition. The Eurozone, once a relatively insular market, was now competing in a globalized arena where investors and institutions could access liquidity and opportunities across continents. This international competition forced Eurozone firms to innovate, improve efficiency, and adapt to changing global market conditions. The constant evolution of global financial markets, coupled with the influence of new technologies, regulatory developments, and economic factors, made it crucial for Eurozone traders to stay ahead of the curve in order to remain competitive in an increasingly fast-paced and interconnected world. The rise of retail trading in the Eurozone has been a significant development in the financial markets over the past 2 decades, largely driven by the democratization of trading through online platforms. Services like eToro, Plus 500, and others revolutionized how individual investors access financial markets, providing a user-friendly interface and lower barriers to entry. These platforms allowed retail traders to buy and sell a wide range of assets, from stocks and currencies to commodities and cryptocurrencies, often with minimal capital. The ease of access, combined with the ability to trade from anywhere with an internet connection, empowered millions of retail investors to participate in markets that were once the domain of institutional players. The availability of leveraged trading also provided the opportunity for higher returns, though it introduced significant risks, especially for inexperienced traders. The role of social media and online communities in this rise cannot be overstated. Platforms like Reddit, Twitter, and YouTube have become integral spaces for retail traders to communicate, share ideas, and discuss strategies. Subreddits such as r/Wall Street Bets became famous for driving speculative trading, with users discussing stocks, options, and crypto with a level of enthusiasm that often transcended traditional investment analysis. Twitter has become a hub for real-time updates from traders, analysts, and financial influencers, while YouTube hosts countless tutorials and live trading sessions that have further empowered retail traders with knowledge and strategies. These platforms have also fostered a sense of community among retail investors, allowing them to collaborate on trades and share insights that might otherwise be inaccessible to individual traders without the same resources as institutional firms. However, this increased access to financial markets comes with its own set of challenges and risks. While retail traders now have more opportunities to build wealth and diversify their portfolios, they are also exposed to significant volatility and the dangers of speculative trading. The accessibility of leveraged products, combined with the influence of social media-driven trends, can lead to sudden price swings and irrational market behavior, as seen in cases like the GameStop short squeeze in early 2021. Retail traders, who may not have the same resources or experience as institutional investors, are more vulnerable to these risks, especially when they follow crowd-driven hype without fully understanding the underlying markets. While these platforms have created new opportunities for financial inclusion, they have also raised concerns about the potential for market manipulation, the spread of misinformation, and the risks of over-leveraging. As retail trading continues to grow in the Eurozone, balancing accessibility with investor protection remains a critical challenge for regulators and market participants alike. The current state of trading in the Eurozone is characterized by both rapid technological advancements and shifting market dynamics, as well as external challenges like regional conflicts and geopolitical uncertainties. These factors are influencing not only the way professional and retail traders interact with financial markets, but also the broader economic landscape. One of the key drivers of change in recent years is the growing role of technology. Innovations in artificial intelligence, AI, machine learning, and big data are increasingly shaping both professional and retail trading practices. AI and machine learning are enabling traders to analyze vast amounts of data in real time, allowing for more precise predictions, automated trading strategies, and improved risk management. For professional institutions, this means faster execution, better analytics, and more sophisticated models for identifying market trends. For retail traders, technological advances have democratized access to trading tools that were once available only to large institutions. Platforms now offer automated trading bots, customizable algorithms, and advanced charting tools, providing everyday investors with more powerful resources to compete in the markets. Big data analytics also allow traders to better understand market sentiment, economic indicators, and emerging trends, creating new opportunities and insights that were previously out of reach. Amid these technological developments, there are significant market trends that are reshaping the Eurozone. One prominent trend is the rise of ESG, environmental, social, and governance investing. As both institutional and retail investors become increasingly aware of the impact of their investments on society and the environment, there has been a marked shift towards sustainable and socially responsible investing. This has led to the growth of ESG-focused funds, green bonds, and socially conscious investment strategies. The Eurozone has seen considerable regulatory efforts aimed at supporting this shift, with policies designed to enhance transparency around ESG metrics and to encourage companies to adopt more sustainable business practices. Another trend influencing the Eurozone markets is the lasting impact of Brexit. The United Kingdom's departure from the European Union has created new complexities for cross-border trading, particularly in financial services. Many financial institutions have had to adjust their operations, moving some activities from London to other financial hubs within the Eurozone, such as Frankfurt and Paris. This relocation has reshaped the structure of financial markets in the region, creating both challenges and opportunities for Eurozone traders. At the same time, the rise of retail traders, empowered by online platforms and social media, has become an increasingly influential force. Platforms like eToro and Robinhood have empowered millions of individual investors to participate in markets that were once dominated by professionals, leading to a rise in market volatility driven by retail trading activity.
If you found this video helpful, be sure to hit the like button and subscribe to the channel. Until next time, this has been The Long and Short.